Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. This is our free video that we sort of do on dovetail to our regular site offering daily Monday to Friday. Supposed to be just a quick summary of what we sort of chatted about in the daily brief and an overview of the basic risk on, risk off kind of conversation in the market from a day-to-day perspective. I have to tell you, our little breadth indicator here is helping us out immensely. As I'd sort of said here recently, fast breadth's getting a little bit oversold now, and you can see slow sort of catching up here. And you know, the interesting thing when we get to your chart deck, we see that the Russell 2000 stocks, the small cap stock universe, is actually doing fairly well relative to the big boys. So I wouldn't be surprised if the sort of fast sort of chops along here in the sort of oversold zone as slow works its way down, and then we actually might even get a turn back up. We'll see. As soon as the fight comes in, we have to go through one of these sort of consolidation fights. Right now, we're what I would call this is the market was egregiously oversold. The moving averages themselves were very, very far apart. Now we're probably going to have to go through a period where they, come back together, and we ask ourselves, okay, well, is this really a bottom? As well, too, seasonally, usually once we get through the July U.S. holiday long weekend and we actually get into earnings reporting season, normally the market finds some sort of footing and enjoys this summer rally, right? Summer doldrums, dog days of August, that kind of stuff. Given COVID concerns, government's actually ramping up closing downs now, especially within North America. Not so much hearing it the rest of the world, but definitely within the United States of America. Then also, too, what did that COVID experience do to corporate earnings? We're going to find out through this upcoming corporate earnings season. So my hunch is, tech names, pharma names, anything that's sort of insulated from sort of the consumer and retail sector specifically, probably going to do okay. Government contracts, those kind of companies, nothing really changed there. But anything that's very consumer oriented and brick and mortar retail, that kind of stuff, watch out there. That could be ugly. Our general message for the market, of course, and on top of all of this, gee whiz, we've got a big celestial event that's supposed to be happening today and tomorrow. And actually, this actually might be absolutely perfect because I never even thought of this before. But, for the purposes of this video, I won't go into this too much more detail. Maybe I'll talk about it in the daily brief tomorrow. But what we may actually be having, look at that. Isn't that interesting? So this actually, June 1st, June 30th, July 1st is supposed to be our Apex event. I wonder whether that actually is our Apex candle there. And of course, most of the world, well, not most, a good portion of the world will be on holiday tomorrow. Canada, for example, this is our July 1st holiday, so all our markets are closed. A lot of markets around the world will be closed. And then, of course, the Americans, they officially go into their July 4th holiday. So I believe that Friday the 3rd is basically a non-event. So I would imagine tomorrow, actually probably right through to Tuesday. What a coincidence, eh? Gee whiz. A nice vacuum in the market. I wouldn't be surprised if that's our Apex event. And if that's the case, then maybe we have to, in actual fact, this might actually even, and I'm kind of rambling here, but what the hell. It's my video, and I don't charge you anything for watching this. So if you don't want to watch it, that's fine. I'm not going to be insulted if you decide to not participate. Okay, so let's see what I did here. Did I do that right? I don't think so. I'm going to flip that around. And we'll go like, I think we, how'd you do that, Kevin? Did you flip it or did you mirror it? I kind of remember. If we flip it. Alright, so that should be exact opposite of what we see here. Aha, look at that. Very interesting. So, now we actually have a path, because I kind of thought that this would be some sort of apex pivot, and then, oh boy, look out. This is where the shit's really going to hit the fan here. I don't know what's going to happen, but look out. I like the idea that this, we're probably going to see, after the holiday weekend, people feeling a little bit more optimistic, then checking these highs, and then nice, like I said, usually second quarter earnings comes out relatively okay. So take us through that earnings season window. Once all that's done, remember, I don't think I mentioned it in the public broadcast, but I'm not sure. There's supposed to be a really big vote in the U.S. Congress about their next stimulus package program right around this event window. So interesting. We'll see how this plays out. I mean, it's pure conjecture. There is no trade setup for me here. But I always like to sort of ask myself, sort of forest through the trees, what's sort of the big picture going on here? So let's keep an eye on that. That might have been our Apex event candle there. And how fitting, eh? Just an absolute perfect shooting star doji. Well, actually, yeah, shooting star doji. Perfect. All right, so that's your U.S. dollar commentary. This should technically be a... There you go. Thank you, Kevin. So, yeah, there. Now, we got to let him talk. So, what's on your mind, sir?
Sorry. I didn't know I was off mute and here I go sneezing.
I get the impression Kevin doesn't agree with my analysis. I don't know. Excuse me.
I just...
It's all good, dude.
sorry
It's all
about
good. You're the best, man. You can sneeze anytime you want. So theoretically, that is a risk, like I said, a risk on proxy. We'll see how this plays out overnight. What was really fascinating about this, of course, is think, right? At one point, first thing this morning, this was just a monstrous green candle. And we're having a lot of fun recently actually trading the Asian kill zones, and actually all the kill zones, because it really all depends on where you are in the world. And the currency markets and having fun. I love trading Australian dollar. This is one of my favorite currencies to trade. And just trading the horizontal support and resistance levels. And I got to say, man, this little model's killing it here. So that move in the U.S. dollar to new highs was this U.S. dollar tanking and breaking this key support level, which, of course, is a trade location for us. And you can see the violent reaction on the other side of that event. I mean, this is such a typical futures trader's life. And actually in our TRI SOF club, we have a couple members who are actually actively pursuing this trading model right now. So it's really cool to follow along. Anyway, point of the matter here, I think they probably ran a horizontal support and resistance level here. Since we're already long, I don't think it makes sense to reverse the trade because you're long two. First one goes out at plus 18, stop to scratch on remaining. And the goal is just to see where the hell this damn market finishes the day and then just close out the position into the closing bell. Or if your stop gets scratched or scratch gets stopped, whatever. I mean, I suppose you could discretionary come in and, move stops against lows, whatever. But anyway, really good example of that monstrous sort of trap move that they do in currencies often. And like I said, the exact opposite image is the US dollar index did this big honkin' shooting star here today. What I did notice when we were sort of going through our regular rant, and today on Tuesdays we have Kevin on the call, so sneezes in all. So it was actually a lot of fun, just sort of looking at how Kevin's looking at the market and what he's interested in, all his crazy warrants and stuff. Actually, I did have one warrant idea that I went and put a bid in on, but I remember it's such a bitch getting filled on this thing because it trades in fractions of pennies. But what I do find interesting, and I think I've sort of, hopefully, I've articulated this to the public recently. Um, I really like the tagline. This is a violently flat market state right now. So, top of the range, bottom end of the range, just a massive trading range here. End of the week, sell risk off, don't take chance into the weekend. Coming out of the weekend, okay, phew, no real disasters. But at the same time, too, they could have carved out an outside upside key reversal here if they had just taken the market up through this high, but they didn't. So it's not really like this is like, oh my god, insane bull. This is just dead cat bounce. I don't know how this is going to play out, to be perfectly honest with you. I mean, nobody does. I think the trade setup is there. And I think the conservative price objectives for a move back down. It's a good idea just to use 50% rules. Don't be greedy. Just, keep it simple, stupid. So, believe it or not, could very easily see stock market work its way right back down to this 2700 area. Off of this short setup, could we get rallies back up against these highs into this reload zone? Sure. In fact, this might even be carving out a wicked harmonic pattern that might take us right back up against these old highs here before that 50% level move is done. Could happen. I mean, it's trader's life. Shit happens. I was short the stock market, but I actually was short through proxies. And I don't recommend anybody trade these leveraged ETFs. They're a mess sometimes. So I was long this proxy, and I did the trade through basically the SOX, put in this big M, reload zones. You should all see the logic in this. It's pretty straightforward stuff. Gap fills, blah blah blah. So I bought some. I wasn't really overly impressed with my trade itself, but basically I wanted to get short off of this. So we actually did get the pump, but because this was it was an okay trade. It wasn't great. I was gonna risk against this 525 low, and you can even see when I was in this, I took some serious heat here, but I didn't get stopped out. Market jumped back up, and maybe a little bit poor psychology. You can see this monstrous gap. Remember, this is why I don't like trading these leveraged ETFs, because where the fuck's the setup? I mean, this is just a mess. We started to show some signs of failure here, and I was just like, huge gaps down below. They came right after my stop here. The market held the low, so that's good. But if I was going to be risking, maybe I should try and get long down here. So I just hopped off. Market did work a little bit lower, but you can see one of the key components in this SOX index came out with a bullish report. Interestingly enough, when we looked at the stock itself in the daily brief, and we looked at a bunch of semiconductor stocks, and Nvidia, very strong stock, but all the rest of them not overly impressive. So I guess it doesn't surprise me after that sort of initial Micron boost. She started to melt back here, did fill in the gap. And basically my message to the community is, okay, well, I've got something to work with here. I've got a relatively defined risk window now that's relatively small. So I'm just going to try and be patient here and just see if I can get some sort of candle pattern that puts some sort of base in here. And then, I'll seriously take a look at strapping this short back on. Did a V bottom new low, and then we just snapped back counter trend rally high. So I am basically just going to be watching this sort of range in here. I might go and strap this back on, but right now just watching. So that's sort of my stock market shorty kind of thinking right now. Not short right now, just sitting on the sidelines. I have to say, kind of pulled one out of my butt there the other day. I'm not really that much of a gold bug right now. But at the same time, too, setups are setups are setups. You know, they just do their thing. Actually, here, why don't we pop on over to your screen? Where is that? Over here? Do 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 do. Interesting. Before we leave risk on, we talked about this the other day. The oil market is rallying into that reload zone and into that gap. So let's demonstrate how we can lose some more money. And let's throw on a hypothetical trade. Why don't we do it against the 78.6 and we'll risk to new highs. And we'll see how this one goes. 50% level. So now we're going to try and shoot for a 7.6 to 1. The cool part about this is at some point, actually maybe I should put that up there. At some point, one of these is going to win, and you're going to see that, okay, we lost $1, lost $1, lost $1, made $7. Fucking A. Hey, we're actually profitable, even though we're like 1 for 3. But anyway, let's see how this one develops. So that's sort of a typical sort of, trader's got to trade. I hit reload zones on gaps and shooting star candles. Not really the best shooting star, but nonetheless. Maybe even say I hunt 127s as trade location. You can actually see that this actually is a really cool horizontal support and resistance level too. So candle body highs, you've heard Brian talk about that before. And, maybe this is a big honking head and shoulders. I think we talked a little bit about that the other day. Who knows? Let's see what happens. So anyway, that's setting itself up. On the flip side, and actually what we're seeing in the gold market would support that thesis of shorting oil. On the flip side, bonds really haven't broken down. They actually traded to a new high here this morning. And, interestingly enough, we talked to you guys lots about gaps. So what a big surprise. Market basically rallied up, filled in the gap, and now we're sort of floundering. Bullish AB equals CD still looks to me like we're pointing higher. And we're back in this trading range again. Gee whiz, what a frustration. If stock market is actually topping out, then really we should see this move up top here again. But interestingly enough, check out your gold, all you gold bugs. Really good analogy. Hey, I'm a bot trader. I just got to trade the bot, and I'm going to risk against these lows and just forget about it. And sure enough, it's just working its way higher here. I think I had said recently I really didn't like the size of this, and of course the location, it's a million miles away from its lows. But, I'm a trader. If I see shit that looks interesting, Brian's going to trade. And also, too, I think this is a really good analogy of the, a really good example of the, strong opinions loosely held. I don't think it's in anybody's best interest to predict where markets are going. And, your opinions, no offense to anybody out there in the world, whether you work at the Wall Street Journal or at Goldman Sachs or Merrill Lynch, opinions don't really mean a hell of a lot. The only thing that really matters is do you have vetted setups? And then when those setups actually come in, do you actually take them without reservation? And that's the key. All our level oneers, hopefully you're practicing that the 7 truths script religiously here. So, this gold bot's working. There's no point in arguing it. It's working. I'm not doing this trade the way that I'm approaching it. Brian, he likes his stocks and stock market. So the way I'm approaching it is through Newmont here. Big gold stock, biggest gold stock in the world. I suppose if gold's a bull, this thing probably should be a bull. So, in essence, and I had said about a week or two ago that, if this if this double bottom, and actually, in my eyes, this is a cup and handle. If it fires, then I don't really have a choice. I kind of have to take it. It's what I do. So, indeed, and I think that was on Friday, it fired. Yesterday it was basically an inside bar, non-event. Suppose if we had gone through yesterday's lows, that would have been a bearish signal, but boom, up we go through the top. And actually what I like about this is, suppose we can take that number off there now. I've got a situation here where the bot level is actually fired. Think of that gold, same sort of thing. I was going to risk against his double bottom anyway, but now at least I've got the setup supporting me. Lots of gaps to the downside, so don't be shocked, everyone, if gold has to calm down for a week or two. Who knows? You saw that funny US dollar matrix. I don't expect any of this shit to move in a straight line. Remember, violently flat. So, you may actually find that this is the flatness of the market. We rally all the way up to the top end of this range and all the way right back down. This is basically our playground. But what I do like about this is what I like to call a front running the bot. So if we do run up to the 50% level and bot says, move your stop to scratch at that point, and the market does work its way back down, I can actually exit this trade even theoretically at scratch with a little bit of a profit. So that pays for slippage and commissions and shit like that. So begrudgingly, and got to give a big apology to a gentleman, Georgie. I don't even know if he watches them, but I got kind of crass at him about a month or two ago. Again, all excited about gold and, investing in gold, and now's the time to invest in gold for the future. And I'm like, oh, I hate that kind of talk, because this is the end of the move. I mean, do companies naturally go from like 50, 60 bucks to 80, $90? That's not natural moves. This is, if anything, this is absolutely perfect 2020 celestial event, Jupiter Saturn cross. Go look at what gold did the last time Jupiter Saturn crossed, 1980 fear cycle. It's identical. The shit's just, it's repeating itself here. But, once that event's done, I'm not going to be married to this position. On this event, I'm getting the fuck out of here and counting my profits. Absolutely. But, this kind of chart, oh my goodness. Yeah, I could see gold 2,000, 3,000, maybe even 5,000 an ounce by the end of this. Gonna be a crazy ass year, that's for sure. And I was also watching junior ones. This is a really popular one in Canada, B2 gold. You can see the intermediates. Sjord would call that a massive flagpole. I mean, hopefully you can see this thing's pointing a hell of a lot higher. And I drew up the bot levels here. In fact, this was so big that I actually had to go off of this level. And that's telling me, easily a good $10. So, gee whiz, that's like a 30-40% gain from these levels. The gold market's moving up. So, enjoy the rally. And if anything, my message to the community was, actually, this makes sense. If the stock market's crashing, then we get into margin calls, indexes are collapsing. Keep in mind, a lot of these gold stocks are in things like the S&P 500 and the big, TSX indexes, whatever. Maybe not this one, but Newmont definitely. So, if stock markets are crashing, they have to go down with the indexes. They're part of the index. Also, too, you get into that, oh shit, my Amazon position is under margin. I don't want to leave that. I love that stock. Don't sell it. Okay, what else can I sell in the account that can generate money so I don't have to get margin liquidated on my Amazon stock? Hey, there's this gold stock. Yeah, okay, fine. Sell it so I don't get liquidated. So you get those kind of situations in crashes. In this violently flat scenario, we won't get the margin calls. We're not going to get the big, capitulation that, of course, everybody would love to see. I guess that's this kind of chart. We're probably just going to bound around here. The irony of it all is that we're not even really that interested in if this is actually a top until 38.2s are resolved. So in this kind of environment, with the Fed printing presses going full steam, and the talk of more stimulus coming down the road. This is and the economy is adjusting and getting used to the new money supply numbers, and the stock indexes are firming up, and there's no big bankruptcies on the horizon. This is a paradise for gold. And I was telling, I don't know whether I said it a few minutes ago, but I was telling the site today there was a window I remember right after the Obama, first quantitative easing stuff, where the trade was to be long bonds, gold, and Apple Computer, which of course didn't make any sense. You're long bonds, which are interest rate sensitive. If you're long bonds, you're expecting interest rates to fall. And you're long gold, which is an inflation proxy. If inflation is running up, then that means interest rates should be going up, which means bonds should be going down. But the trade was to be long bonds, long gold, and long Apple Computer. So, market can remain illogical for far longer than any of us can remain solvent. We might be going through a scenario like that where, things like Apple and Amazon, NASDAQ, tech stocks, super strong. Bond market, you saw there, looks like it's still trying to point higher. And lo and behold, here goes the gold. So maybe the tech stocks are actually considered a conservative sort of safety, to avoid things like the retail brick and mortar blow up. I don't know. Oh, now I'm just blabbing away here. Anyway, you shake it. Gold's heading higher, so I am long gold through things like call options. And, of course, I love my venture capital stocks. So there's a whole bunch of little ones. Geez, I think I sold my Alio a little too early, eh? Oops. Way to go, Brian. And remember, this is a great commentary. I'm just one guy talking to you, the public. Am I, I suppose if I was making bazillions of gazillions of dollars, I probably wouldn't be doing these free videos for you. But hey, hey, I'm happy I made money on this. But did I leave some money on the table? Yeah, I did. I think I also showed you like that nugget. It was botting out. Look at all these gaps up top here. I mean, this thing's got, rally written all over it. But we were even talking about in the Daily Brief today, look who's coming back rearing up his ugly head again. I took a long shot off of here and got stopped out on this event. And lo and behold, this dog of a silver stock is trying to go and bottom out again. And did confirm the double bottom here. And Kevin actually mentioned this morning. He's like, I'm seriously going to take a look at this one. So some of these companies are setting up. They say, this is probably a little lesser quality. Lots and lots of stock out. It's kind of a dog in the space. The better quality ones, I think they're already breaking out here. And then, like I said there just a moment ago, I've got some cute little ones that are just starting out. They're not really going to go now. And if they go now, it's probably the rally's a bit premature. But my little VCIM screen spitting up ideas like this juggernaut. You tell me, has this thing got any room to move up? So they're in the metal space. And I picked up a little bit of MT. Anyway, I suppose we don't need to go into too much detail there. This would be like a new acquisition, right? I'm just adding it to the portfolio. Most of the time, actually, I don't even really tell you about the stuff that I'm buying. What I sort of do is toot my own horn and show you what I'm selling and taking profits on. So what was I doing in the stock market today? Man, this is one hell of a trade. This thing's beautiful. What's really interesting about this trade, too, is it's such a great analogy of put yourself into a position of strength and then just let the market do its thing. So I actually first got interested in this blank back here, and we picked up a whack of the warrants. This is a warrant trade, BLNKW, on the gap fill, the W, etc. And I was able to get a double off just on this rally here. And actually, I even sold half on a triple. And then forget about it. And look at that. I mean, basically a year and a half, nothing. A lot of people would be like, oh, it's dead money, man. What are you doing just sitting there doing nothing? Well, it's free. I don't have any time horizon. Hopefully, I'm still going to be around a few years from now. You never know. But the long and short of it here is there is no risk for me on this. And sure enough, we just ran up to another double level here today. So I got filled again to 250, 252, I think, somewhere in that area. Which, ironically enough, is a double of my triple. I was supposed to be selling, I was long, I think, at about 35, 40 cents. So I was supposed to be selling half at 80, then another half at 160, then another half at 320. But no, in this case, I sold half at 120, and then I sold another half here at 240. It's not rocket science how you do this. And it's not like it's written in stone, you have to sell at exactly this ratio. Just when I saw the pump here today and I looked at the price that I sold it at, it was more than double my last sale level. So I was like, fuck it, out goes another half. Anyway, had a pretty nice morning there, as you can imagine. Nice treat. Thank you very much, Mr. Market. And interesting, we talked about risk on, risk off there a minute ago. And our Russell 2000, if anything, again, really, really good analogy. Don't get into the business of predicting what's going to happen. Because I can tell you, number one, down in here, everybody's like, sky's falling, capitalism's over, you might as well just go home. Clearly that was wrong. And then even a couple times, well, maybe we've topped out, and, predictors would be like, this is it, we're wrecked, going to zero. And what does the market do? Nope. Right back up to new highs. And here we go again. Market M's out, comes right back to the trend line. And are we going to break? Nope. Here we go, pushing to new highs. So the market still has quite a bit of speculative oomph in it. And I'm not ready to really... first and foremost, it's not in your business to say this is the top or this is the bottom. You're just asking for trouble doing that. But as I had said, and I showed you, I actually took my shorts off. And really, I'm just going to wait patiently for the market to tell me to get back in on the short side. I just don't see it here right now. And, of course, keep giving me stuff like this. And, what a bull market. Heading on over to crypto. I think just same sort of conversation as risk on's catching a bit of a bid, working back up. I don't think it should have surprised anybody that we rallied coming out of the weekend. Interesting how we rallied up to 38.2. A very, very good lesson for all new people to trading. Even our level oneers, current students. Right? Perfect analogy of 38.2 battle. Also, too, dangerous to take a trade on a break of a trend line because you don't really know whether this is a bull. And I don't like when fractals fire on a move through the trend line. That's dangerous. So as you can see by the white line here, I did note that, gee whiz, we did fractal right off the 38.2 in the break of the trend line. This is encouraging. It's positive, but it's not really a quote-unquote buy signal. What this really is saying to me is, okay, maybe the market is done sort of trending down, and it's trying to reestablish that it's a trading range. And if that's the case, then you can see reload zones as they exist right now. There was that original inside bar failure there from a week. Here's a good example of that trend line, right? If you had seen this trend line break and went, that's a bull, that's a buy signal. No, it isn't. And bang, right back down you go to the trend line. This happens so often, people, it's ridiculous. So, like I said, we can't really assume that that's a buy signal. And really, ironically enough, what I actually have to do as a trader is I got to wait for some sort of market structure signal on the other side of this trend line. And like I said, on the other side of this trend line, the market structure signal actually came in. Oh, actually, I'm a bear. Sorry. Back down you go. So I don't know what's going to happen here. But, you could probably make the argument, nice and simple. We have a bullish resolution on a move through that high there, 92.40. And I'd even say probably a bearish resolution on the loss of that low, because that will be an inside bar failure and it'll mean back below this trend line. So there's sort of your playground right now. Basically about 9 grand, and that makes sense, right? Big fat round number. You might even see pullbacks down against candle body lows, and we could probably do things like reload zones off of this range. And what I would want to see, yeah, so I could very easily see dips against Mountain Man here. And, you know, I wouldn't even be surprised if we see that sort of like here and then back up. But so again, sort of that conversation about trend lines. Be careful about taking any signals right off of this level. If anything, if I was a bear, I actually, you know, I like the idea of this because it was so far away from the trend line that the loss just brought the market back to the trend line. If this signal fires right here on the trend line, that's a pain in the ass. If anything, what I would expect is something like this. Terrible drawing, right? And then you got to take that structural signal on the other side of the trend line. Messy and terrible location anyway. If I wanted to short, I mean, that would be assuming a nice little bot short setup kind of thing. If I was just sort of looking at this and saying, okay, well, you know, I do want to strap on a short, where should I be thinking? I should be thinking hunting up here. And probably what it means is maybe even something like right up in there. So we'll see how it goes. Violently flat. I can't reiterate that message enough because I really think that's exactly this market state right now. And, you know, FYI, full disclosure, whatever, Ethereum, I'm looking for that counter trend rally to buy some puts. So that's sort of the state of crypto right now. You know, we've been watching these perp indexes, pretty good proxy on the junior market. Remember we had talked about if this really is a bull, we got to get up through the top here. Clearly we failed. This, if anything, is what they call a Wyckoff check now. So we've broken market structure. We're bouncing back and we're asking right now, do we really want to be below these levels? Right now, actually, the market's like, no, I don't. But we could easily flounder, and that literally means the loss of this trend line, and that starts opening up this for serious corrections. But, you know, kind of that vote, you know, when do I expect the stock market to break? I'm thinking probably a week or two from now. So I wouldn't be surprised through the holiday weekend. Violently flat. We're just going to get a lot of sideways, choppy here, probably for the next, my hunch is probably right through to the end of the holiday weekend. So enjoy the market state, everybody. Okay, I think we'll leave it at that. No idea how long that was, but I hope you got some good value out of it. All the best, and bye for now.